everybody. Happy January. I hope you're having a good Friday. Jeff Gibby here. We're going to do a little bit of a market recap with my good friend Jeff Tompkins. So I hope you're doing well. I hope you're excited. I love this. We just started this a little bit earlier or late last year where we sit down every week and just talk markets. So in any case, before we do that though, we always read a legal disclaimer. So it will be my treat to recite for you our legal disclaimer. And here we go. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading, and MetaStock shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. So I hope you enjoyed that. I've got it memorized. We could go through it again if you want, but let me go ahead and get this out of the way, and let's talk a little bit about our guest today. Hey, Jeff Tompkins, how are you?
I'm doing well. Thanks for having me.
It's good to have you. It's an interesting day to have you on Market Recap.
Yeah, absolutely. We're seeing some interesting price action in the market, so I'm excited to talk to everybody about that today.
You've been so the name of the company that you run is Trade Trend, and
yes,
why don't you tell us a little bit about how you got into the market?
Yeah, sure. So I got in. I've been trading about 20 years, and I trade pretty much everything. I started out trading stocks and options predominantly, and later got into the Forex and futures markets. And now I kind of trade a mixed basket of all of those, just depending on market conditions and applied volatility and things like that. But I first became interested in the markets back when I was in school, and I was looking for a way to supplement or really create an income when I didn't have much of one other than summer jobs, and went through all the trials and tribulations that most traders go through without any real professional training at the time, and have since received some professional training from Morgan Stanley, and actually just launched a hedge fund of January this year at the beginning of this month. So I'm now manager of the Altos Capital hedge fund, and like you said, Jeff, I also developed the Trade Trend indicator that's available on the MetaStock platform in partnership with you guys, and that's achieved a lot of success with our members. And we also do trade alert services, newsletters, coaching, online trading courses. So we have a broad offering, and really our goal is to help educate aspiring traders, help them become better at their craft, and shorten the learning curve, because there is a really steep learning curve in trading and investing. There can be many years of trial and error like I went through, and in my case it was well over a decade of trial and error, and the goal with us is to try to shorten that, and we've had a lot of success. We currently have over 20,000 members across the globe in over 100 countries, and have trained a lot of retail traders to become more successful and consistent in their trading. And I actually started the company about 5 years ago, and we operated as the trading profit up till January this year. And we've merged companies, and we now operate under Altos Trading. And Trade Trend is one of our main products that we offer through Altos Trading. And again, that is available on the MetaStock platform. So that's kind of my background.
That's awesome. I hadn't heard about the hedge fund. Congratulations.
Thank you.
So you want to talk about these markets?
Sure. Yeah. So that's why I'm here, right?
A little bit of an interesting day today, right?
Yeah. So we see a bull, and you guys can see my screen okay, right?
Yeah, it's coming through. So.
Okay, fantastic. So yeah, we obviously had a bearish engulfing day today, with really no defined overhead resistance. And these can be tricky times in the market, because a lot of the analysis that our company does on the broader market, and even when we get into individual securities like we'll do together today on a couple stocks that I'm watching for my own portfolio, we use a top-down approach, but we start by looking at horizontal support and resistance levels in the market. And being that we're near all-time highs in the market, there's obviously not going to be any defined overhead resistance, but we can certainly look for price action that indicates a potential move lower, like we're seeing today with our bearish engulfing pattern. And we want to look at the catalyst behind that, and we'll talk a little bit about that today as well. And then we'll want to look for lower support. So where is the market likely to sell into, so that we have an idea of where we may see what retracement levels we might be looking at, and where we may see a rebound off of those retracement levels. And again, that would be our horizontal support levels. So I wanted to spend a little bit of time mapping those out on the S&P 500, the SPX, which I've got pulled up on the chart here. And this is just a daily chart. And one thing I also want to point out about our close today was that we closed below 3,300 on the S&P, and that's significant. So one thing that our firm watches very closely are major round numbers on the S&P. And so you see today we closed at 3295. We had obviously broken above the 3,300 level here. But anytime we close above or below a century mark, we want to pay attention to the price action around that century mark. And by century mark, I mean every 100-point interval on the SPX. So just a couple of days ago, we topped out at 33.37 and some change. And if we see a week or so of price action closes above a big round number, that will signify a potential continuation of the move beyond that level. But we're actually seeing a rejection at the 3,300 level. And so we want to pay close attention to that, especially in the context of this bearish engulfing pattern that we have today. So let's talk a little bit about the catalyst behind this. There are there are really a few geopolitical things going on right now that are causing this sort of bearish price action. And many of you may have been following these in the news. And one of those is the Wuhan virus that's emerged out of China. And there have now been a couple of reported cases of that in the US. There was another one that was reported this morning. And that was a major catalyst behind this sell-off. We also, of course, have the impeachment, which I don't think is going to have any real major long-term impact on market direction. And we've got the kind of the unrest that's going on overseas in Iran and Iraq. We don't really have any overhead resistance. We're at all-time highs. And now we need to look at, okay, we've gone parabolic since about October of last year, of 2019. We had a small little retracement here in early December. Sorry, what was that?
Oh, I didn't say anything.
Oh, I thought sorry, I thought I heard something.
Yeah, no worries at all.
Yeah, if you jump in if anyone has any questions, feel free to interrupt me or let me know if there's anything you want me to elaborate on. Um, I'm used to being interrupted, and I don't mind. So
Okay.
otherwise, I can sometimes go on start rambling. And
No, I'm interested to see. I like the causation factors that you're kind of talking about. I agree with you. I don't think the impeachments, like we've been doing that for like a couple months now, and it just the market just keeps going up. I guess the
Mhm.
one question I have for you is like,
Yeah.
do you think might be kind of like a turning point, or is it just going to be like the because like it seems like over the last, I don't know, rememberable history we've had like the market can't stay down for more than 2 or 3 days in a row, so
Right.
I'm wondering kind of
And
like
that's a great question. Of course, I wish I had a crystal ball to answer that with certainty. So I can say that this is certainly in terms of looking back uh, into October of last year and just looking at the price action on the chart here, this is the most significant potential reversal pattern that we've seen since going back into
August.
mid
Yeah.
2019. And so yes, I, in terms of the time window going back to October of last year, this is the most significant. And being that it's also in the context of this really parabolic uptrend with really no significant retracements, um, it's not going to take a lot to push us lower. And for instance, if this Wuhan virus gets out of control and more cases continue to be reported, which I think is probably likely, just because of the nature of it being a virus, those obviously tend to spread or they don't last long. And this one seems to be persisting, although it doesn't seem to be as severe as the SARS epidemic that we saw a while back. Um, but I think that, yes, to answer your question, I think there is a higher percentage chance of a sell-off in the market. So then it really becomes the question of, well, how bad can this thing get?
Yeah.
And then that's where we want to really look at our levels.
Okay. I'll let you talk about that again.
Yeah. So again, just without even looking at a price chart, and if you were just looking at prices on the S&P, the century marks, the every 100-point increment, so the 3,300 level, which we broke today and closed. And by the way, I look at the closing prices past these levels, not trading past and then reversing. So we obviously traded down today to 3281.53. But if we had then reversed and closed back above 3,300, that would actually, even if we didn't close up on the day, that would actually be a bullish signal, a bullish continuation signal. So you really want to pay attention to where the market's closing, because that's really going to give us the true kind of weighting of the sentiment, whether it's bullish or bearish. And so we closed below 3,300. So the next century mark would, of course, be 3,200. And then we'd be looking at 3,100, 3,000. But I also give weighting to the half century and the quarter century marks. They're just not as significant. So if you weren't looking at a price chart, you could simply just pay attention to those levels: 3,300, 3,250, 3,200, 3,150, and so on. But often we'll find that if we begin to mark these levels on our charts, we will see that there is actually significant support or resistance at those levels. An obvious one is right here, and these are rough levels. They're not meant to be an exact science, so they won't necessarily match up perfectly on the price chart. But you can see if we put our level here at the 3,000 level, and this obviously is not just a century mark, but a millennial mark at the 3,000 level, and so those even hold more weight. And you can see that we had very strong resistance there that we had a lot of trouble breaking through until October of last year, where the market went parabolic. So I think a lot of the reason we've seen this parabolic uptrend is that we haven't had any big catalyst to push us down, and we broke a very significant resistance level at a millennium mark at the 3,000 level on the S&P. So, if we were to break 4,000 at some point in the future, then that would be very, very significant. So just pay attention to these levels because certainly all the big funds and institutions do, and that's why they hold so much weight. And we can go back very far into the past and find that these levels will hold a lot of significance. And obviously we can see one here at the 2,900 level. Back when we had that major sell-off back in early 2019, then we see we formed a bottom there around 2,350. So we could see these come into play if there was some sort of market crash or change in sentiment from bullish to bearish. And then, of course, the other thing to keep in mind and put into the context of all of this is the fact that we've been in a bull market for over a decade. So we're really in an unprecedented bull market run here. And that in and of itself creates a higher probability of a bear market occurring sometime in the near future. And again, it just takes some sort of a catalyst to put us into that territory.
Sorry. We have a little bit of a question from Brett on YouTube.
Yes.
He wants to know if you have any thoughts on whether the FAAMG earnings what they will do to market sentiment.
So which company earnings is that?
FANG, FAANG.
Oh, the FANG stocks.
The FANG stocks, yeah. Mm-hmm.
Yeah. Okay. So Facebook, Apple, yeah. So the earnings is the other big catalyst in the market. What I'll say about earnings, and yes, that will have an impact on the market. Obviously, earnings are unpredictable, but even more so, the earnings reactions really is what is the most unpredictable. You can get a pretty good educated guess on a company's earnings per share, just looking at their revenues, debt to income, and all of those things on the balance sheet. But what's hard to predict is how the market's going to react, because a company can report positive earnings and the stock can still go down because it didn't beat analyst estimates and so on. So I try not to predict earnings, but certainly they can impact the market. The one thing I'll say about that with the FANG earnings is, and really any other earnings that are released on a quarterly basis, is that they only tend to have a fairly short-term impact on the market. Obviously, they're reported quarterly, once every 3 months. So they might have an impact on the market. And the FANG stocks are obviously a heavily weighted component of the indices that, you could see over the course of a week or two, or maybe a few weeks, if what am I trying to say here? If the reaction to the earnings is positive, you could see that push markets higher a little bit, but it's not going to really have a long sustained impact on the trend. Really what it's going to do is it's going to prevent, in the absence of a major geopolitical event, it's going to prevent the market from really selling off if the reaction is positive, or conversely, if it's negative, it could, with the market being more fragile right now, make things even more wobbly, and combined with any sort of geopolitical event like this new emerging virus, it could really weaken the market and cause a sell-off. So I do pay attention to earnings, but again, they tend to have a relatively short impact on price action, whereas geopolitical events can have a much longer impact in terms of the trend, more medium to long-term impact. So good question there. So level-wise, go ahead.
He goes on to make another point with the, I think what he's saying is, with the bull market already long in the tooth, good earnings may not be enough to kind of keep perpetuating it. And I think that's similar to what you're saying. Bad earnings might be enough to kind of end it, or to end the trend too, right? So
that's all I can take. And the takeaway from that, well said. And the takeaway is that the market is just very fragile right now, and it always will be fragile when it's at all-time highs, because you have to think about this in sort of a logical fashion in terms of how the market works. And prices are going up because you have a lot of buyers coming in, especially on the fund and institutional side. And they're always looking to unravel profitable positions for their clients, and take profits. And so if you kind of keep that mindset that all it's going to take is unwinding of profitable long positions, that can really push the market over the edge. And they'll tend to do that when there's uncertainty in the market at all-time highs. So if they kind of do the opposite of what most retail traders do. They're getting out, and that's why you see sell-offs in the market and rebounds when prices are low. But they do the opposite. They buy when prices are very low. So when everybody else is fearful, let me zoom back out of the chart here. We'll go back to this major sell-off we saw down into the 2350 level. So this was back at the end of 2018 and early 2019, but we had topped out around 2,900 on the S&P and sold off all the way into 2,350. So that was nearly a 20% correction. This really actually almost put us into technical bear market territory. It's just a little under a 20% from peak to trough sell-off. And basically, when this happens, all the funds and institutions are looking to come in here and buy up shares at a cheap price. So when all the retail traders are fearful and panicking and taking losses, the funds and institutions are coming in and buying things up and driving prices back up. And that's really what happens on these sell-offs. And I can tell you as a fund manager myself, that's what I'm looking for, is I'm waiting for everybody to become afraid and fearful. And as horrible as it sounds, I'm waiting for them to take losses on their long positions, and then I'll come in and buy up shares at a good price and wait for the market to come around when the supply demand curve shifts back the other direction. And so right now, I'm just waiting for that to happen. This is not a good time to get in at all-time highs because the market's too fragile, and funds like ours are looking to get out of long profitable positions. Okay. So that's kind of where we are. And so, you can see the levels here, but I would highly suggest mapping these out and keeping a close eye on them. I can see an obvious one here, 2850. You can see here where we found support at that level 4 occasions from August of last year. It also served as a resistance. And another thing to point out here, by the way, that we teach our students is once a resistance level breaks, it then becomes support, and vice versa. Once a support level breaks, it then becomes resistance. So that's why this 3,000 level is such a strong support. And if we do see a significant sell-off, and I mean real significant, it would be probably somewhere into the 3,000 level, off of where we are today at 32.95.
So I'm curious, does that right now, kind of, the way I'm kind of reading your take on the market is it's pretty toppy. You'd be waiting for more of a value. Does that mean that you're not interested in taking up positions at all, or would you be a little bit more selective about the stocks that you're purchasing? How does that affect your actual day-to-day investment?
Yeah, great question, Jeff. So to answer that, that's a complex question, obviously, because it depends on your strategy, whether you're long stocks or you're doing vertical option spreads or calendar spreads. I mean, it kind of depends on your market strategy and what you're trading. But just from a simplistic viewpoint, just saying, let's say we're just long equities, I wouldn't be entering new equity positions unless I found a stock that was bucking the trend. In other words, what I would look for, and I actually found a couple candidates today that I'm going to share with you here in just a second. But what I would look for is if I were looking to go long, and again, I would be very cautious, I would look generally to get long equities on a sell-off into support. So if we got down to the 3,000 level on the S&P, then I would be looking for buying opportunities, and I'd probably have a lot more success down at that level than up at highs where we are now. But with that said, if you can find equities, and I did find a couple today as I was doing some research for our fund, that seem to be bucking the trend. And when you can find those, that's a good sign, because it means there's a lot of strength behind that equity. If the overall market's selling off and the stocks are still doing well in the midst of a sell-off, that's a good sign. And especially on any rebound in the market, they're probably just going to do even better, unless there's some sort of inverse correlation between the company and the overall market. Like if it's an oil stock or a gold stock or something, and there could be some sort of inverse correlation. You want to watch out for that. But there were two stocks I found today, and we can take a look at those.
Oh yeah, let's do it.
Let me. Problem with the webinars is these control panels always get in the way, so I'm just moving this control panel around here and trying to get it out of the way. All right, so I noticed that Netflix did fairly well today, or at least not. I haven't looked at the price action today. I think it went up a little bit, but it's just been trending very nicely. And I want to switch this over to candlesticks. So Netflix was kind of in this kind of sideways range here for quite a few months, and it broke that range back in July and looked like it was really starting to trend down. But that trend, the downtrend, broke back in October, and the stock has actually traded up really nicely, and is now in a pretty well-defined uptrend. Today it closed up. It closed at just above 350. And again, that same principle that I use, the round number principle that I just talked to you guys about on the indices, on the S&P, I look at that with stocks as well. It's above that 350 mark. So that's significant. We also closed higher on the day. We had a big move up yesterday, in the context of an overall uptrend that actually broke. Look at the trend line analysis. Now in this nice uptrend. And so again, with the move higher in the context of the overall market sell-off, that's a bullish sign to me. And so this is one stock that I'm looking at in terms of bucking the trend of the overall market on days when we have sell-offs like this. Any questions on Netflix?
Nope, we don't have any questions.
All right, and this one's really in a channel, so I'd be looking. So we draw the resistance area of our channel here. We are kind of, and that's likely why we saw, along with the sell-off in the market, some rejection of the highs from today. So if I were to, of course, none of this is intended to be advice to purchase any securities, including Netflix. But if I were to purchase Netflix, I'd be looking at doing so near the bottom of the channel. Now being that we're near the top, it wouldn't be the most opportune time to get in. But anywhere if the channel continues to trend upward around 335 or so would be an ideal entry point.
I'm interested to ask you where an exit would be. Would you use the lower channel as kind of your stop in case if it doesn't go the right direction?
Yeah, if this trend line, this lower trend line breaks, that could mean this trend that we saw that started really back in October could be over. But I think this one has legs to run. I think it could be. Yeah, in terms of a stop, I would potentially look at putting that below the trend line support, which is of course the bottom line here. The important thing with drawing these trend channels is remember they're not a static.
They're an area.
Right, they're an area. They're going to keep moving, so you want to make sure as price moves that you continue to draw them out, and don't just base it on the time that you drew the channel. So yeah, you could look at a stop loss if implied volatility is fairly low, which it tends to go down, of course, as prices go up. And put options aren't too expensive. I may look at using protective puts on any sort of a break of a support level, like this lower trend channel. So there's a few ways you can protect the shares if you're looking to stay in them longer term. You can sell calls against the shares to lower your cost basis and bring in income. There are a variety of strategies that we teach our students to protect positions versus just using a simple stop loss and taking a loss on the trade.
Awesome. Let's look at the other one.
All right, great. Let's get over to that one. Okay, so the other one I was looking at was Newmont. So Newmont Mining, ticker on this one is NEM, has been in a good uptrend. This one tends to have a little bit higher risk of retracements. I mean, you can see that when it does sell off, it tends to be fairly dramatic, but it does also tend to stay in a channel most of the time. I mean, going back to July of last year all the way through the end of the year, we remained in this channel for half a year, 6 months. But what's happened here towards the end of last year is we've broken out of this channel into January. And again, just like we saw with Netflix, we've got a bullish day. So we closed above the 44 level. And we actually, let me get my line here. We closed above this resistance area. So you can see there was strong resistance at 44, closed above it. So I would be watching this to make sure that this isn't a false breakout. And if we get a few closes above the 44 level, this could end up being a good candidate for a long position, especially again considering that we had bullish price action on a bearish engulfing day on the S&P. And so if we zoom out a little bit here, we can look for our support. So our strong support really lies down here around the 40-50 level. So if we are looking to take a long position in Newmont Mining, I would be looking at maybe putting a stop or some sort of protection below the 40-50 level, where we can see that we have some pretty significant support here. But this is another opportunity that I found that could be a potential long setup in the midst of a market sell-off. So those are the two I wanted to share with you guys today.
Great. Great. Oh, well, I want to. I think that was great. I really appreciate your coming in, sharing your insights with the market on us, and um, good job. How can people get a hold of you if they're interested in kind of?
Yeah. So if you guys have any questions, you can email us at support@altostrading.com, or you can actually just go to, let me pull up a window here and just show you our website. So this is our company, Altos Trading. You can also just go to our website at altostrading.com, and you can see we offer trading courses, trade alerts, coaching, trade trend software, which again is available on the MetaStock platform. And if you have any questions, we have a toll-free number, 800-895-9348, or you can simply fill out our contact us form, and we will get back to you, or one of our representatives will get back to you in a timely fashion. So yeah, there you go.
All right, thanks, Jeff. Appreciate it.
Thanks for having me. It's great to have everybody on today. I hope you guys got a lot out of it, and look forward to seeing you guys next time.
Thanks for coming, everybody, and have a good weekend. We'll see you next time.